all platforms are token economies, however small or big. And so you need tokens on your platform. You need more and more. The more tokens you have, the bigger the economy. And I think Solana's proven that more tokens equals more better, just based on like the success of Pump.Fund and then what that does for transactions, trading volume.
Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your Ledger today. Hey everyone, this episode is brought to you by Uniswap Labs, who is launching the largest bug bounty program in the entire history of crypto. It's a $15.5 million program. This is aiming to be the most rigorously reviewed code base ever deployed to Ethereum. So if you want more eligibility on the scope, rewards, payouts, etc., just click the link in the bottom of the show notes, tell them that I sent you. You'll be hearing all about Uniswap Labs later in the program. Hey everyone, this episode is brought to you by Morpho, the sleeping giant of DeFi, is what some people are calling them. That is me. I am some people. I am a huge fan of Morpho, the protocol, and the team. You've heard Paul Frambeau, one of the founders of Morpho, on the program before. Morpho lets you earn, borrow, and build on your terms with better rates for lenders and borrowers and an immutable design free from upgrades or parameter changes. You're going to be hearing all about Morpho later in the program, but for now, let's get on to the show. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. Today, I'm joined by two friends of the pod, Myles of Delta, now we've unveiled that, and also Jim Parillo of Figment Cap. Guys, welcome.
Great to be back.
Thanks for having me.
It's been a minute, Myles. It's been a minute since you and I have been doing anything. I know. I think we'll do a few more this spring. I think, had to learn how to product there for a while, but now that, I'm about 6 months in, I think we get back into it.
All right, cool. Well, we can take some of the lessons that you're kind of putting into use in real time here, because I want to talk to both of you guys about a subject which I think gets discussed a lot at a high level, but we don't go into the weeds often on, which is go to market in crypto. And there's a little bit of kind of dark arts, magic, marketing and positioning, et cetera. But there's also an element which is very tactical and very execution oriented. And I want to talk about both of the components of go-to-market on this podcast with you guys, and maybe start with the higher level positioning type stuff. And then I want to get into the weeds on kind of the different buckets of what you need to do to tactically execute a good go-to-market strategy in crypto, and actually use some examples of folks that we think are doing it well, and maybe some folks that could potentially be doing it better, just lessons learned, et cetera. And for listeners, I think we're going to approach this mostly from the perspective of a new L1 or L2, or just call it a developer platform in general, where the idea is you want to attract developers who are building applications that will ultimately make things that are useful for users. So that's largely the perspective that we're going to be approaching this conversation from. But maybe we can start with that first big bucket. And Myles, I'm going to tee it up to you here, where, when you're thinking about going to market, there's before you start doing all the things that you need to do to actually onboard users, developers, et cetera, there's kind of a goals and consideration of how do you want to position your product. So walk us through the framework of how, like a developer platform, L1 or L2, what are all the different considerations that go into positioning?
Yeah, totally. And so, as you said, I think this is a distinct work stream from go-to-market execution sales, but they're obviously extremely interrelated, and a lot of the work should inform the other and vice versa. But from a positioning side, this is, at a high level, how you present yourselves to the world, how you present your platform to the world. It's the messaging, it's the narrative, it's, basically who you are and who you're not, right? Who you're counter positioning against. And I think at a very high level, regardless of the nature of the project, you kind of want to put yourself into the largest mental folder possible, right? In the eyes of the audience. You can think about when you pull up, your folder on your MacBook, and you've got, you click one drop down and it says crypto, right? And you've got Bitcoin, ETH, Alt L1s. And then within ETH, right, you would have another drop down. It's like rollups, okay. And then within that, you've got like EVM or optimistic, ZK, and then like alt VM rollups. If you're and no hate to like alt VM rollups, I think we need them. They're great, but like you are putting yourself in a pretty small folder as okay, within ETH a rollup, and within rollups this alt VM, which we think is better than EVM performance, right? There's a lot of context that your audience needs to have to even like understand what you are. And so I'd say like to the extent that's possible, you want to present yourselves in a way that, lands yourself in a much bigger folder, right? Ideally it can be like, well, there's Bitcoin, there's ETH, there's alt VMs, and then there's this, right? Or, within rollups, there's like the big guys, and then there's me. So I would say that is like kind of a high level objective for across all platforms, right? And then then you get into like the how you do it, a little bit more like a click of detail. And I think your positioning and your messaging is an opportunity to present like a POV that draws out like-minded developers, right? Like-minded customers from wherever they are, and say like, oh wow, like what they're putting out there really resonates with, I guess, my view of the world. Like, I resonate with this ethos and this long-term vision. I think, you ideally want to like evoke a reaction of like, oh, this is like basically what I've always wanted to exist. And, people that I feel more like-minded with them than I do maybe where I currently am. And last thing I'll say here is that I think specific to, who you're kind of targeting for that reaction, you definitely want it. You like need to think about, okay, who is our like day zero most likely customer? And kind of craft the message for them. But in a perfect world, you can thread the needle where you put out a more like evergreen message, right, that resonates with those day zero customers that you need, but will also resonate with, let's say, like day 2 or day 3 customers. Something like, the crypto curious fintech that like is looking at crypto in a new light because you're putting out sort of like differentiated messaging, right? That's not always possible, frankly, and sometimes you can get stuck. There's a risk of like not appealing to anybody if you're trying to do that too aggressively. But yeah, I think that's like I'll pause there, but a bunch of considerations.
All right. So to sum up there are a couple of different buckets. There's the how big is the folder or the bucket that you want to put yourself in. So there's the Bitcoin, ETH folder, rollup folder, and kind of imagine different subfolders, et cetera. Then there's the values alignment. And then I actually want to start. I've got a follow-up question for you on that first, like the how big of the bucket you want to put yourself in. How much of this has to do, at least in crypto, with this relative valuation game that people like to play? And this maybe a good example of this is Hyperliquid. While you got people that are pretty upset about whether or not it's an L1 or an L3, and this is an actual debate that people are having and calling everyone mid-curve. And I would guess the reason for that is because, if you're in the L1 bucket, valuation-wise, your ceiling is $2 trillion, which is Bitcoin. And then if you're suddenly an L3 and you get bucketed with degen, you're looking at, I don't even know what their valuation is.
Yeah, totally. So like I'll like respond to that with like a contrast, right? Like I don't think Atlas has even like referred to themselves as a roll up, right? They kind of call them, it's a chain, right? And that is, I think, tied to kind of the line of thinking that you were just describing. On the polar opposite side of the spectrum, base and optimism, they have are presenting themselves in a way that like their goal is basically to say, oh, this is like an extension of Ethereum, right? This is Ethereum, exactly Ethereum, but cheaper, better, faster. And Coinbase has made all these nice features that I can use, only here, right? So it's like they're just trying to like basically export as much of Ethereum activity as possible to them. Versus Atlas is, I think, and a bunch of other new ones have just kind of presented themselves in a way that like, this is net new, this is a chain, this is a product. Sure, great. Like if we get a bunch of ETH users, because we're also an ETH rollup, that's awesome. But that's not necessarily how we like want to present ourselves to the world.
Jim, I want to tag you in here. What do you think about this?
Yeah, we're seeing a few rollups now, like to say like we're blockchain, right? we're a chain. Like that's what we are. And I would say that, to your point, Mike, that like the entire point here is like the valuation that you can achieve by being a platform versus like or an L. Everybody wants to be wants L1 valuation, but maybe not everyone's an L1. And so the more you can like blur the lines, like the higher like the potential upside is, and like that gets investors interested, it gets holders interested, it gets retail interested in like buying your token, holding your token, buying more of your token, holding more of your token, and kind of like just the ceiling is just higher, right? So like, and we see a number of applications looking to become like, application specific chains or rollups. Athena just made an announcement that like they're going to be building their own chain, right? And so like I guess the assumption there is that the more control you have over like transaction flow, the more control you have over like processing your own transactions, the more valuable you are because you're like a bigger platform. Just to talk a little bit more about like the platform side of things, like I think like one of the questions that people have to ask themselves when they're building a product is like, where do you fit on like the B2B, B2C, B2B2C, or B2D, which is like what most like chains are. It's like their business, like they're actually two things. Like I did a bunch of research last year, like, or not research. I had a conversation with Zen Lama, who was like one of the DevRel up until recently at Monad, and I realized I didn't know anything about DevRel, and so I like hunted him down at one of the events, and I was like, what do you think DevRel is, like from your perspective? How does Monad like handle DevRel? And it was enlightening, but it also just told me that like, how little I knew about it. And so I wound up going down this like crazy rabbit hole, trying to read books on DevRel. And if you ask people about Web3 DevRel, they'll tell you like they have various feelings and like emotions, and like they'll tell you that it's like partially business development, it's partially like it doesn't really exist. But essentially I was able to read a few books that like I thought were really helpful. I've actually recommended a number of them to like portfolio companies and people that I've talked to on Web2. And then you just try to make like some sort of like connection or correlation between Web2 DevRel, where there are books about it that you can read. And you come away with like quite a bit of like education and learning that you can say, oh yeah, this team did this, right? This team read this book probably and like executed on like chapters 3, 4, and 5. One book that I would like just strongly recommend to anybody, it's a very easy read, it's like probably less than 150 pages, was The Developer Facing Startup. It was so good that like I did cliff notes for it, and I like actually posted it on my Twitter, like the cliff notes. So if anybody that doesn't want to read, just wants to like read the notes, I just found it to be like wildly insightful and gave me like so much like information that I could share with portfolio companies on just like how to think about a business, which is like I think what we could argue like a blockchain sort of operates like, or a platform, and like how do you market to developers. And one of the things that you come away with almost immediately when it comes to Web3 versus Web2 is that you have two sets of customers, at least in crypto, where you only have like arguably one set of customers like in a corporate setting, like in Web2. If you're a developer facing platform, you are just marketing to developers for a very, very long time, possibly forever if you're a public company or a private company. Web3 has this like kind of like challenge, which is like they have two products, right? They have the platform, which needs to market to developers, and marketing to developers is like very, very like no bullshit. Like they don't like a lot of fluff. They very much want to talk about like technical things with technical people, and they don't want to be marketed to. So like that's like you can't market to developers. Like they will sniff it out, and they understand it very quickly. They're very smart. The second thing is that like you have this other product, which is the token, which goes live very quickly. And so now you have to market to another category of people who are more interested in like speculation and investing from launch, right? Like a lot of these companies don't start talking about like share prices and how to like optimize for like share price until like much further down the road in like their corporate journey or their like business journey. And so you're kind of, no offense to retail here, but like you're kind of stuck in this weird place where you have two products, the token and the platform. You have to market to like the left curve and the right curve. And it's a very kind of like difficult needle to thread, where you need like both parties to be very interested in you, keep their attention, and like somehow not piss off one in hopes of like attracting the other. It's really wild. It's really cool. It's a great experience. I mean, I think it's a great industry, and I think that's like a part of like what makes it so challenging and so fun for so many developers. Like so, and why you see so many different flavors of it, and why marketing is like really kind of an art, not a science. Thus far in Web3.
Yeah, it's a very interesting. The other reason I think that's such an interesting point in terms of how do you market the asset is there's kind of like what levers do you really have to make the asset go up? Maybe we can talk about that. This is where you get into not financial advice, right? But it's an interesting thing about what you can even do. But the reason it's so important, I think, as well, and where it ultimately ends up connecting to developers is that the total addressable market for apps that are built on your platform often directly correlate to the market cap of the asset. So the direct examples that I would give you are on Ethereum in the early days where, what were people doing? They were depositing ETH and looping it in Aave, or they were basically getting leverage on their ETH through Maker, or they were swapping Ethereum with other ERC20s on Uniswap, or at least by V2. So, the actual market cap of Ethereum, the fact that that was a very large asset created the opportunity ultimately for a whole bunch of applications. So they are tied together. And there are other businesses, by the way, and I'm curious, Jim, if any of these books talked about this, where the analog that I would also give you is there are lots of businesses in the real world where you have a long value chain. Maybe just take an example of someone like a manufacturing value chain, like John Deere, right? Or something like that. So there's often the OEM, the creator of something like John Deere, is separated from, they've like a lot of these big companies have outsourced their sales forces to regional distributors that actually have access to the customers. And so oftentimes what you end up seeing is there's some kind of specialization, right? Where you have John Deere that makes these tractors, they send it out to these regional sales forces, and those like regional distributors actually have the relationship with the customer. And then eventually John Deere says, hold on a second, I want a direct relationship with my customer. And so I don't really know how you do that as a developer platform, as an L1 or an L2, right? What you can influence and who you can speak to is the developers that are building on your platform. It's a little bit more difficult to say, how do I market my token correctly? What messaging can I do and what levers can I pull to have it be a successful token or not? I guess this is kind of the design, like the tokenomics of the design and how transparent it is and all that type of stuff. But it's kind of an open question for me in terms of how you actually even do that.
Yeah. I think it also gets into like the design of the economics, right? Are you trying to get as many people as possible to come buy your token and stake it, or do you want them to go, use it? And Jim, we were just talking about this. You were telling me about Sui's sort of approach here. And yeah, I think the only other thing I would say is just in terms of the using the token as like kind of a go-to-market tool. It really does depend on like the nature of the platform. I think if you are, especially with like roll-up centric platforms where you're selling whole execution environments, wholesale to developers rather than getting everybody, in one shared state, they may not want like your token to be the center of attention, and like that might actually hurt your ability to get really ambitious projects, right? If they are trying to be like their own shilling, use the token as their own shilling point. But there are definitely tools you can, if you want to incentivize certain types of behavior, the token is a tool. It's also an attention grabber, obviously, right?
All platforms are token economies, however small or big. And so you need tokens on your platform. You need more and more. The more tokens you have, the bigger the economy. And I think Solana's proven that more tokens equals more better, just based on like the success of Pump.Fund and then what that does for transactions, trading volume, realized REV, right? It's a flywheel, and I think one of the other things that's like you do need a lot of tokens. Like you need more tokens, like trading, and that's how you get the flywheel. That's how you battle test like even the infrastructure to make sure that it can handle like surges in trading activity and volume. getting developers to build on you is like, I think probably like, so number one, you have like the tokenomics within the platform. I'm going to lean on like L1s here for a second, but like you have tokenomics where you're providing economic security, you're staking the token, you're earning more like you're receiving tokens in exchange for like providing, like locking up your token and providing some sort of like economic security so that the token, the blockchain produces blocks. On the flip side, like there's this other community allocation that we keep seeing on these pie charts, and generally speaking, the foundation has some like control over the treasury, and that's probably the most relevant to like your example, Mike, where like, okay, we have these tokens, like what are we going to do with them? Like, are we going to sit on them? Are we going to stake them with other validators? Are we going to have some sort of like staking program or delegation program for the tokens? Are they all going to be staked? Don't we want this to be used as like a gas token? Don't we want there to be an economy? Don't we want our asset to be like at the forefront or at like the base and foundation of that economy? And if we do need that, then we need these tokens to be out, and we need them to be like being traded, and we need them to be like, we need people using the platform. We need people to have these tokens in their hands. If you give me a very high inflation rate, then like the incentive for me to ever not stake the token is like lower fundamentally, and especially when there aren't a lot of applications. So I think what we're starting to see, which is like something that's kind of probably a lesson learned, like when you look at Cosmos in 2021, there were like inflation rates that were like 200% plus, right? And like that was great until it wasn't anymore. And like people held and held and held, and then they just dumped the token, and a lot of these tokens are down like 90% or more. What we're starting to see is like inflation rates that start off like much lower, like somewhere below 5%, frankly. Like sometimes it's 2.5%, sometimes it's 4%. And you could think to yourself like, oh, this is like the network being stingy or something like that. But I think a different way and like a different like kind of perspective on it is that like maybe we're going to use those to incentivize like people actually using the chain versus just like sitting, holding their bags and like never doing anything with it. If you have a 25% inflation rate, like a lending protocol can never offer more yield than 25%, right? On like depositing collateral, unless it's like some sort of like LST. So I think what you kind of want to do is like have like this kind of this sweet spot where like there are some whales, there are some token holders that just like prefer like lower risk, like rewards, like in incentives, and will stake their tokens. But you have this whole other group and category of people who are like actually more interested in like, hey, 2.5% really isn't that good. I think that there's like better opportunities out there for me to make more money by speculating a little bit or trading or buying some other new token, new thing that comes out, right? And I think in those situations, like the foundation does actually have quite a bit of like leverage if they want to use it to like incentivize type of use cases. You could have KPIs or metrics that you talk to like the early developers, because like you have, when you first launch, how many applications, like ideally you have quite a few applications launching on your network, but like presumably nobody really knows what's good and what's not a good application on day one. And so people are going to try a few things, but like you have to give them some sort of carrot to try these things. And if the foundation can maybe subsidize the usage, maybe like the interest rate that like you would receive for posting collateral is 5%, and the foundation like kind of incentivizes another 2%. So now all of a sudden you're earning like 7% interest, like for just providing collateral. And then when you borrow, like maybe the interest rate would be 4% instead, like because of the 5% is being charged, like, sorry, maybe it's like 6%, right? Because like if you're giving depositors 4%, then like presumably borrowers are actually paying 6%. Maybe you can subsidize some of that with like an offset or some sort of incentives that reduce the interest rate to 2%, or 1% or 0% or negative percent. And that's really going to like incentivize people to borrow, and just try the platform. And then it's like up to the platform and up to the application developers to build a really great experience that like makes it sticky, that like once those incentives sort of fall off and stop, that you have this like flywheel where like, hey, I actually really like using this. This is like one of the best experiences I've ever had. Like I put this in like the category of chains that I use, like whether it's I'm using Base a little bit, I use Sui like every day. I've been messaging on Twitter with a few different folks that have been using Sui every day, and I'd be lying if I didn't say that the incentives are great, but like I actually see myself using it quite a bit. and like also like bridging USD, like borrowing against some of my tokens and like bridging those to other chains to use them for trading or for investing or something like that. So I think like there's ways to do this. There's creative ways to do this, and it's about just like being creative and being open to experimentation. So I think like with a foundation having some access and like ability to do these things, you can also like sort of like optimize for like what your targeted goals are. Like you need to have goals as a foundation of like what kind of usage you want to see. Maybe stable coins are kind of like, maybe stablecoin supply is really low on your chain. Okay, well, like, can we incentivize people to bridge over stablecoins? And a lot of these applications aren't going to launch a token on day one when they launch the application. They're going to have their own process of like trying to figure out who are real users and who are not real users. And so, like, I kind of think it's up to the platform to like subsidize that usage early on to get and kickstart the token economy, after which case like eventually those incentives fall off, but then you have all these applications that are like rich in users and like transactions and volume, and they can start to subsidize their own usage through their own tokens. It seems like maybe obvious. I don't think it is, and I think like we're going to see a bunch of different like experimentations with it. I think Barachain and Initia are the governance. Like I think governance is going to play a big role in like how those incentives are distributed and allocated. There will be KPIs, is like my general understanding for Initia. I don't know about for Barachain, but we're seeing experimentation. I think it's pretty cool, and I think like it's 2024. It's 2025. It is a bull market, and so people are on chain and they are doing things. Like 2023, we had a conversation about this before. Like I don't know, what were you guys doing on chain in 2023? Like I was just crying. I was mostly just sad and not doing much of anything, to be perfectly honest with you. But right now, I'm on chain every day, like the whole team is.
What I would say is just I agree with all that, Jim. I think that there's like just tactically that sort of that like exercise and those decisions are all like downstream of a bunch of more like foundational sort of decisions when you're in the earliest stages of go to market. Like in order to know which sort of behaviors to incentivize with the foundation, right? You need to know, okay, what sort of use cases are actually on the platform, and then before that you actually have to get them, right? So it starts really with understanding like, okay, very simply, like whose problem are we like most acutely solving today, given our properties, right? What sort of projects will best highlight these differentiating properties? What sort of projects will like highlight basically the sort of ethos that we want to create here, like a culture that we want to create, because that in itself can be a GTM hack as well. And then I think from there you can decide how like targeted you want to be with your go to market. Like if it's very clear what these use cases are and like you have a very coherent plan, right? Like I want an app for this, and they're all going to be complementary, share users. Then you put together a team that like is, best equipped to execute on that. And like, or maybe you want to be, either you don't have necessarily a great idea of what you want to, the use cases that you want to target, and you don't want to actually limit these sort of use cases by your own imagination, right? And you want to go as wide as possible. Then you kind of take like open up the community as early as possible, get everybody in, regardless of whether like they're, a meme maker or like a blue chip app developer. Let's just get a bunch of people under this tent, right? And then at the very least we can, when a project looks at us, they'll say, oh, well, there's a bunch of users in like kind of an active community, right? That cares if I go there. I don't, it's not maybe the most coherent like mix of people or like applications, but there's something there, right? And I think this goes into the sort of like, this should inform your hiring, the sort of people that you want to hire, right? And this should inform, I think, like just generally like the strategy that you use. And this goes into DevRel, right? Or like DevRel, is both top of funnel, is like actually Cooper wrote a great piece on this the other week. I think it's called DevRel, like sales in a trench coat. It's like, yeah, these guys, are a combination of top of funnel evangelists, as well as like community managers and then also like, solutions engineers, to some extent. And which one of those three, you really want to prioritize, like, I think matters on if you want to go super targeted or super wide. If you want to go super targeted, then you want like solutions engineers, right? That are going to actually go super deep with these customers and make sure that their implementations are as successful as possible. If, you want to go as wide as possible, then you need like community managers and evangelists hosting events, hackathons, et cetera, just kind of like opening up the tent. So yeah, I think, and then you get down to like, okay, what else can we offer? And then we've got this token we can use, right? And like, once you kind of know who your launch, cohort is and what they look like, you can kind of back into, the best way to support them with your token.
Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today. All right, everyone, listen up. Like I said at the top of the episode, Uniswap Labs is rolling out the red carpet and launching a $15.5 million bug bounty. This is the largest bug bounty in the entire history of crypto to anyone that can find a critical bug with the Uniswap v4 protocol. This bug bounty aims to make it the most rigorously reviewed codebase ever deployed to Ethereum. Now, the Uniswap name is basically synonymous with security. $2.4 trillion in cumulative volume has passed through Uniswap v2 and v3 without a single hack. So Uniswap v4 is dedicated to bringing that same level of security and transparency to the v4 protocol. So if you want more information or eligibility or scope or rewards or payout or any of that good stuff, there's a link in the bottom of the show notes. I highly recommend that you stop listening right now, go to the show notes, click the link, head over and tell them that I sent you. Start earning money today. Hey everyone, this episode is brought to you by Morpho, the sleeping giant within DeFi, as I like to call them. I am a huge fan of both the team behind Morpho as well as the protocol. Had the CEO on, Paul Frambeau, earlier this year to talk about Morpho's architecture. And the part that I really love about it is the modular design that gives you, the user, either the lender or the borrower, much, much more flexibility. So I'm actually going to share my screen what it looks like to go onto Morpho, but as opposed to other borrow lend protocols where you basically just have one option, you get multiple different vaults, which are curated by the industry's leading risk assessors. So that could be a vault created by Spark, MEV Capital, Gauntlet, Stakehouse Financial, etc. You have all of these different options depending on what risk return you want to use, anywhere from 9% APY all the way up to 16 or 17%. So you've got a whole bunch of different options there. The other thing about Morpho is that they've got the simplest code base in the entire industry, very, very few lines of code, which means it's a very, very secure protocol. So again, I'm a huge fan of this team. If you are a lender and want to earn interest or you want to borrow in a capital efficient way, I highly recommend that you click the link at the bottom of the show notes, head over and tell them that I sent you. All right, cheers. So I have another consideration maybe to make around just incentives. And I actually want to double click on something that Myles said as well, which is that sometimes it's hard to know, especially at early stages, what you should be incentivizing. And I actually want to maybe try to defend some of the very early iterations of yield farming. And it ended up getting knocked quite a bit because everyone said, "Oh, look at the CAC that you're paying, and it's way too much, and yada yada. It's mercenary liquidity." One of the benefits of yield farming that I don't think got discussed enough was that it was actually highly simple. It was very, very simple in terms of what you needed to do. You just needed to lock your tokens up. That was something that most of these projects needed because they were based on attracting supply side liquidity at that point. And I have this lesson from just designing sales comp plans where sometimes when you get too granular in terms of incentivizing things, they combine in weird ways to produce weird incentives that you could never have predicted. And there are kind of these design philosophies and principles that I have around this, which is make it really simple. Everyone should clearly, easily understand what you should do. And you should almost assume a paperclip factory where people will just take it too far. So I think it's a little bit challenging. Actually, when Blockworks has kind of evolved over the years where we started as a conference business and then a podcast business and editorial and research and data. And every single time we spin up a new part of our business, we don't have any KPIs for the first year because we actually don't know what we should be measuring at that point. And I don't want people running in some random direction and splattering heads in a wall, right? You kind of want to almost give some more autonomy and optimize for flexibility and choice, at least in the earlier days. So
Totally.
and it's funny, like as you guys were describing kind of the challenge around staking, like how much you want to play with inflation and whether or not that incentivizes people to stake versus also the token. It's kind of like both of the lessons of Cosmos, right? Like this is Cosmos writ large, which is they had extremely high stake rates on all the early chains, and everyone just kind of locked it up in airdrop farm, especially for Atom. But Myles, I kind of want to push back a little bit about. I really do think the best thing that you could do for an ecosystem like a L1 or L2, like Solana or Ethereum or Mega ETH or whatever, is to prioritize the L1 token. Otherwise, you end up with this weird tragedy of the commons where there's no shelling point. And I think actually, Dan, we put together some interesting data on this as well. Like one way that you could judge the success of an L1 or an L2 or a developer platform would just be how much application revenue is being generated on that. So people like to use this stuff like chain GDP or whatever, just straight up measure application revenue. And this is Ethereum and Ethereum L2, like the application that, or the total aggregate application revenue that's being produced on Solana versus ETH plus ETH L2s. And you can see that it's been flipped, Solana versus Ethereum. So I don't want to make this a Solana versus Ethereum.
No. But just to poke on that a little bit, because let's look at, and not to be too harsh on AVAX here, but AVAX, that kind of was, I mean, they were one of the pioneers of yield farming with incentives, right, on the C chain. It's completely incoherent with the strategy of like the last 3 years, which is really B2B sales for subnets, right? Like none of that activity like translated to new subnets. It was hiring a big business development team, right, that's going to go get like the California DMV to launch a subnet. And that's all I'm saying is like, if their goal was to create like a, basically the most popular like single state machine, execution environment with tons of apps that share state, that, and like that's pretty straightforward. I totally agree with you. But if the token itself is more of like, the users may not, if you're on a subnet, you may not ever see the token AVAX, right? It's a B2B token. That doesn't make as much sense. And there's like, I don't know, it's a nuance, but
one of the things I would say is that like B2B is not coming. Like the B isn't coming if it hasn't been tested, battle tested a little bit, and that like the tech doesn't work. And so I think like the ends might justify the means
fair
eventually, right? And so like I do view, so when you have this first network, like you need to have people using it. And so like I think this comes into use cases as well. I think Toli had a really good like point on I think a Blockworks podcast, which was where he was like, look, there's like 6 things that you can do on chain that like are like the tried and true. It's like lending, it's trading, it's I don't know what the other liquid staking, and like I don't know what the other 2 or 3 are.
He said like 6 contracts actually.
Okay, 6 contracts.
6
that's
smart
right.
contracts. Yeah,
that's right. And so like you build those out. I think generally speaking, like the question of like whether you kingmake or whether you have a general sort of like open economy and say like, hey, does everybody come here and build, or do you want to kingmake a few projects? And I think for where we are and like how mature this industry is, I mean, it has a long way to go, but it's pretty mature, is like you're competing with chains that have a ton of users and a ton of applications and a ton of diehard like zealots, right? And so like I think what you generally have to do is like you have to have like gamble, like if you look at the Wild West, right, and you look at Nevada or you look at California, like sure, California is like got Silicon Valley and a bunch of beautiful homes and a lot of like development, but like when you look at the Wild West and why people went out there to begin with, they went out there in covered wagons, looking to get rich and trying something pretty risky to make it, right? And like that's the first use case was the gold rush and running out there doing crazy things, like, and like what were like the 3 businesses that existed out in like the Wild West initially? It was like picks and shovels, farming, saloons, and like gambling, right? Like I mean there's like sin businesses, And you do that, you get people to come in, you get more and more people to stay, and then then there's an airport later on down the road, right? Then there's like a hotel that's like really nice, like the Four Seasons or something like that. But the Four Seasons doesn't just go up and build in a place where like nobody exists right now, right? Golf courses don't exist on day one. They exist over a much longer period of time. And like you have to go through the process. And like we talk a lot about building civilizations, which I think Mega ETH just posted something on, or building cities. And like it would do people a lot of good to like do some like history research and see like how were cities first built and what were they built on. And like my general sense is it was like mining, farming, booze, and gambling, you know, and like and that's
booze. So I agree with this. Maybe let's talk a little bit about now we're getting into some of the execution of go-to-market, which is identifying your customer and sequencing. So there's oftentimes, you want to, especially as a founder, I'm very sympathetic to this idea of you want to build and sell a big vision, right? And a big compelling vision often isn't, I want to get a bunch of degens gambling on my chain, right? But I also think that there's a way that you can have, I want to be, I'm building towards being the Goldman Sachs of crypto in 10 years, right? You can't really actually say that that's a realistic goal for year 1 or 2. And so I think one of the ways that you can do this is you can actually sequence out, in 1 or 2 years, this is what I want to be. In 3 or 4 years, this is what I want to be. In 5 or 6 years, et cetera, et cetera. And what are the customers that I'm going to, who is my ideal customer going to be at each phase of growth? And so
Totally.
The reason I like this 5-year roadmap is because it's focused on the user.
Yeah.
It's focused on the user. And also, I really think this is one of the things that trips founders up in general is your ideal customer and the vision of your product ultimately can and should change and evolve over time. And this goes a little bit back to what category do you want to put yourself in? And, sometimes I see like there are a couple of different approaches here where let's use the example of an AVS, right? Like AVS is kind of an interesting little subgroup where you can say, I am part of this AVS category. And immediately what you get is some amount of attention, right? Like some amount of people just care about AVSs. People will immediately kind of know what that is. That's the advantage. However, you might be putting a ceiling on yourself over time. That would be the disadvantage to being an AVS. I've always been of the belief that you can evolve the category that you're going to be. And it's a little bit better to be known simply for something, right? If people have to think too hard about what you are, I think that's a disadvantage. And you can always kind of use it as you can almost think about, you catch on to one narrative here, right? Today I'm an AVS. And then in 2 years, you say, actually, I'm this other thing, right? Like this is what Hyperliquid did. I'm a perps dex. And now I'm an L1. You can change and evolve the market's perception of who you are. So how do you guys think in general about this kind of identifying your customer, different phases of growth and sequencing?
So I would say this, like you can't really get away with the Ethereum GTM approach anymore of just like kind of putting out values, right? And being neutral and kind of saying like, if we build it, they will come. I think in general, you want like projects these days are just, you already see it. They're more opinionated about the use cases that they are saying that they're differentiated for. They're proactive in their targeting and they're proactive in first party development, right? We see this with either first party apps or infra like Atlas or Anisha, even things like putting out, what's it called? Like block explorers and first party like wallet adapters and things like that, AMMs, order books. But you also want to be like, you don't want to be so opinionated about the use cases that you're good for that it, puts you in kind of a narrow category, right? That you can't grow out of over time. And so I would say, there's, this kind of concept of like backcasting. You need to do a combination of backcasting and forecasting. Backcasting being like, this is the future that, we think we can enable, right? Once there is critical mass, of adoption after like 2 years, what sort of apps, in use cases can we facilitate, and like, going backwards from there, figuring out if those are the sort of use cases that you can also target on day 0, or if there's actually, sequencing and path dependence to getting there, right? In general, you kind of want to go after your like lowest hanging fruit that's highest leverage in terms of if you convert them, this could make a big splash. I think there's very real, and it will be like more and more common to build apps yourself, especially apps that, grab attention, right? And potentially like go viral. Everybody wants to have like their own pump.fun or like their AI agent thing. But you also want to be careful that, you're not competing with your customers. You're not turning off developers because you're putting out, they think like, oh, they're just going to clone me. Right. I like did a ton of work with Osmosis when I was at Reverie, and that was always a challenge. There is the canonical AMM, the canonical front end, right? How do you, it's great that there's liquidities and users there that you can plug into right away, but you don't want to be like a second class citizen forever, right? So I think those are the sort of tensions. It's like the more opinionated you are, like the easier it is to identify that low hanging fruit, but you don't want to like put yourself into that narrow sort of set of day zero use cases long term.
I guess just to like add to that, one of our portfolio companies, Euphoria Finance, just did like a coming out of stealth reveal on Monday, and they have like 200,000 web emails on their wait list right now. Now we recognize that there's not 200,000 people using crypto today, and so we know that there's like been some farming of waitlist right now. But like I think the one thing that was really interesting when we had a call with them yesterday is they were like, look, we thought that would be important just to make sure everybody can join the waitlist. And we're pretty sure at this point that we know where our first 10,000 users are coming from. Like that we know that they're on this list. And that's super exciting. And we can then like identify them over time, and we can grow from there, and we can like kind of build out having some assurance that like we have our first 10,000 users. That is super important. And then from there you start to grow. I think like Hyperliquid is a good example of a team that built a really great product and is now like gonna go wide, right? You can go wide or you can go deep. And I think like to Myles' point, like there was this, I didn't realize it was tweets about like a meme coin called like Y2K, but everybody was talking about nostalgia and like how powerful nostalgia is. And like me checking into Twitter for 5 seconds and seeing this tweet, like I like kind of was like, well, here's the thing about nostalgia. You're right, it is really powerful, but it like generally can like what it does oftentimes is it like paralyzes forward momentum, and so like it kind of predisposes individuals and organizations to have an unhealthy skepticism and a reluctance to take risks that require necessary change. And so like I think you want to like have firmly held beliefs. It's like I have strongly held beliefs that I hold on to like softly or something like that, right? Like you want to there's something like that. I know I messed that up.
Strong beliefs weakly held. That I think
strong beliefs weakly held. And you want to keep thinking about like where are the next users going to come from? What do we need to be thinking about 2 years down the road, 3 years down the road, 5 years down the road? And even like the things that we hold really valuable today, like maybe we don't hold them as valuable, and maybe it stands in the way of like actual progress or growth down the road. And I think we can see like several examples of that over the last 12 months of like organizations and foundations that like people are questioning, or like the decision making, and whether we're holding on too strongly to like beliefs that maybe don't make sense anymore, or don't make sense in this current environment.
Right.
So
yeah. I've unless Mike, do you have something? Did you have a question lined up there?
I was just, one thing that I would love to get your guys' opinion on is, when you're talking about the generally speaking, the two buckets of customers that people talk about is, are we going for crypto natives or are we going for institutions? And this is what it almost always comes down to. And, I would say that, on the crypto native side, it's very like the pros are, it's the low hanging fruit, right? It's who's going to adopt your product today. It's what you can actually look and see that people are doing stuff on chain for. But on the downside is that you often see there's startups, and they're small, and startups are shitty and super pro-cyclical, especially in a mega pro-cyclical industry like crypto. And they ultimately don't have large budgets, right? And this is kind of the lesson of categories like SaaS over the years, is that don't build a retail product, build something that's enterprise and institutional. And so people look at the institutional customers, and say, I think probably correctly, this is the end game, right? And so why, if the end game is the institutions, why don't we just build for them today? The downside of that would be extremely long sales cycles. There's not large buy-in for institutions for the most part yet. And you also might need some amount of critical mass to actually offer a value proposition. I think, Jim, this might have been your point with the bees aren't coming unless you can actually offer them something. And, businesses don't really care about vague shit like settlement assurances, right? Like go try to actually sell into Salesforce on the product or something like settlement assurances and transparency. They're like, what do you like? What are you talking about? But what they do actually want is users and liquidity and things of that nature. So I don't know. I think this
The
is one of
bees
the
want
big
C's.
the bee.
The bees want C's to be there, right? Like ideally you go to a market because you think there's more customers there. Not that like, hey, we're bringing on the businesses, and also, by the way, can you bring your customers because we don't have any. That's a pretty terrible sales proposition to any bee. Like you want to hope that you're growing like the bee wants to make sure that they're getting greater exposure than they have today. If
Right.
like the exposure is just like better settlement, faster execution times, maybe you'll find a few businesses that like that really resonates with. But generally speaking, like they probably want there to be C's as well.
Yes, and this I think even goes into like more into like I was surprised to learn that even on the RWA side, a lot of these larger institutions that are dipping their toes in and looking at like this menu of chains are actually looking at retail activity. But this is no different than even outside of crypto, like open source software projects. Many of them are like now integrated directly into the largest enterprises in the world, but it started off by seeing like how many downloads they have on GitHub, how many stars they have, and then that gets somebody's attention. Then the maintainers of like the OS project build some sort of hosted product around it, right, that they can sell to enterprises. But it starts off with like the organic usage. I think every time. What I would say is that there's more nuance today than ever within like the crypto native side. And it's really like the casino versus everything else. And, I thought it was interesting with base, like I think on-chain summer, which did not have like when they came out with that, it was like, we want you trying like real world stuff every day, checking in for coffee and things like that. And then it felt like, they're kind of fighting the market, right? The market, like where was things taking off? It was taking off in like the Solana casino area. And then you just see them like, from even the leadership sort of flipping the messaging and being like, if you buy a token, buy it on base or like something like that. And I do wonder, like it's clearly like a risk maybe to the more missionary or like, missionary builders in these ecosystems. If you're if it's seen as like capitulating, to like the short-term market and the hype, does that, alienate the longer term oriented builders? I don't know. Maybe I'm like a little conservative here, but I do think that's happening.
Hopefully this can serve as a message to those conservative builders, which is that you need to have the left curve and you need to have the right curve. Citadel, I would say, is right curve on trading securities. And guess who they trade against? The left curve. Guess where they make their money? The left curve. And so my general sense is like you have to build for both. And like if you think that you're going to, if you think that you're going to just be you're different, I would say, okay, like what about what you built is like any different? And if it's a tech, if the answer is the tech, like that just does not work, that does not land. Like what experience do you have in like speaking with enterprise businesses? And like, how are you going to get the first one in the door to like choose you over X, Y, or Z that has, 10,000 users or 100,000 users a day, with like volumes that are in the hundreds of millions of dollars? Like it's a much easier sell. And that's like that's a call that the CEO of like XYZ Corp is absolutely going to take and listen to, because that's crazy amount of volume. And I wonder if we can like slice off a piece of that for like what we're doing as well. I don't think that it starts with like, I think you have to, really have like the great thing about crypto and crypto natives is that they are willing to try things out and do things and either make money or lose money doing it. And like you should view that as like a superpower to really test your product in an environment that is like both highly experimental, very creative, and adversarial at times. And like that could really solidify like the product that you're going to sell down the road. It's a 4 or 5 year step process, and you don't get to year 5 and have those conversations with like actual enterprise grade and institutions without going through years 1 through 4.
Totally.
I would also I would push back on this. I know in crypto we like to talk about mercenary versus missionary founders. I think you have ambitious founders, and you should be optimizing for ambitious founders that are going to end up being successful. And maybe in the very early days of crypto, actually, you definitely had a lot of extremely ideological founders. But over time, that is going to change just by virtue of the industry maturing in general. And it's also going to change because oftentimes the ideologues that were the really early people that started something in an industry which made no sense because they had such conviction around some of the early ideals of crypto might not be the ones that ultimately end up succeeding over long periods of time. And none of these founders are going to get on a podcast and articulate this idea, right? They're not going to say, I don't care if my volumes are coming from pump fun or, pick whatever. I can't even think of super legitimate stuff that's happening on chain at the moment. But like I guarantee you behind closed doors, they don't care, is what I would guess over long periods of time. So
True. Yeah, but if you're trying to target developers that have not entered the crypto space yet, right? That is like the legitimate sort of claim here, where you're saying I'm not trying to go like beat a tradfi institution right off the bat, but frankly, 99.9% of developers out there are not in crypto and look down on crypto because of the casino, and they see they are have spent the last 5 years working day and night at some product that adds value to the world and is trying to get rich the slow way. And then you've got fart coin millionaires, and they're just there's so much noise here. I have a lot of I've heard it before. I have smart friends that work in crypto, but yeah, that's the worst industry ever. And whether or not there's a way to, I think Solana actually presented themselves in a way that did appeal to the Silicon Valley types a couple of years ago. I don't know if there's a viable strategy to do that again today, but no one has really tried it in a long time.
It feels like we're moving into application developers and talking about you want to build an application that serves an underserved community or area or region. You can absolutely do that. I don't know whether that should be the focus of a general purpose smart contract or a general purpose chain. It's general purpose. It's going to be used for a bunch of general purposes, some of which you're going to be these are really great. And these have really high moral and ethical reasons to exist, and other ones that have lower ethical or moral reasons to exist, but they should both exist, and you should give them both time, and it should be based on where you are and what you're focused on. I think the missionary versus capitalist or whatever we want to call it kind of example, in one of the books that I was reading, there's 3 types of let's call it entrepreneurs, but 3 kind of big business types. The first are inventors, the second are innovators, and the third are hobbyists. And I'm going to lean into inventors are someone who creates something brand new that's never existed before, and it could be one out of one. Innovators take inventions and they make them better, and they generally are probably, I'm going to assume, the most successful out of this group. Hobbyists are people who do something because they love to do it, maybe building, I don't know, airplane models or something in their basement, but they don't make money for doing that. And my general assumption here is if you're a founder, you started a company, you decided not to join a company. And my guess is that you did that because you looked at the opportunities that were available to you. And you thought to yourself, I think this is a big opportunity. And somewhere deep down inside of you, however much or little you want to admit it, I think I'm going to get rich doing this. And I think I think I can get really rich doing this. And hopefully serving a better purpose. But generally speaking, let's not fool ourselves here, right? You're a founder, you took on venture capital, maybe you didn't take on venture capital, but you saw the market and you thought that there was an opportunity there. So don't be afraid of making money. You've come this far. And don't become like, if you want to be a hobbyist. Like, go ahead, go into the basement and build model airplanes for 9 to 5. But like, I don't think that's what you're trying to do. And like, I think to like kind of then take that and go, okay, this is like the vision. And then you're like, well, that vision doesn't quite align with like how you're going to achieve the goal that you set out to achieve. I just think it's like let's be honest here. And like, you're trying to innovate, you're trying to invent something new, and you're trying to like ideally become like relatively successful financially.
Well, the other thing too, also, it's very hard to separate, I think, as a founder, the drivers in your own mind. I think that oftentimes, I mean, first of all, there's a massive incentive, right, for founders to get on podcasts and say, I'm doing it for X, Y, and Z reason, right? Like, I'm not saying people are like, you should probably take a lot of that with a decent sized grain of salt, but even in your own head, in the average human's head, it's sometimes very hard to separate. Why am I doing this? There's probably some element of, I think I can do this. There's probably some element of, this is massive financial opportunity for me. And I think there is actually, I think every founder is a little bit of a hobbyist, right? Like, you wouldn't be successful at what you were doing if you didn't enjoy it to some degree and were successful at it or had some edge in it or something like that. So I think it's very just difficult to disentangle all of the different incentives that come into play in any one given person's head, just honestly doing it to yourself in the mirror. But I also think it's difficult, or I think over time, most technology cycles are like this, right? Maybe a lot of the early founders of crypto were hobbyists, but eventually the ones that are every Apple, right, is going to evolve from Steve Jobs into Tim Cook's at some point. And that's probably the archetype that is going to be most successful in this industry over the next 10 years. I would say founders end up looking very different 10 years from now than they did previously. And, I guess one thing that I want to ask you guys as well, in terms of, if you are the spokesperson or head of an L1 or L2 or developer platform, how opinionated should you be here? And I think there's two elements to this. There's the messaging, and then there is also, I kind of want to get your guys' take on first party applications, like an actual L1 building their own roll up as a service, like vertically integrating that basically. And it's interesting to see the maybe some of the messaging and approach that the Ethereum Foundation, Vitalik, have taken in the past. Like, I would say they're very optimistic. I would actually say they've never discouraged DeFi, but they haven't maybe been as warm or welcoming or open to it. At least that is the opinion of a lot of the DeFi founders. We've had Mark Zeller on this podcast in the past talking about this. Kane Warwick has been very expressive about this idea, some of the maker folks, et cetera, which I think maybe has come back to bite them a little bit. On the other side, you have kind of Anatoly and Mert and Solana basically saying, come one, come all. I don't care what you do whatever. And then you actually had Base, maybe Jesse has it, Myles, exactly. It was kind of an on-chain summer and like pay for your coffee in crypto. And now, they pivoted a little bit more towards accepting the fact that there's mostly what people want to do is gamble and there's a casino. They have the additional consideration of Coinbase is a public company and there's maybe a little bit of challenge there. So, I mean, how do you guys think, like, what are the lessons learned in your guys' opinion from the stewards of these ecosystem? What is best in class? How opinionated do you think from a messaging standpoint these leaders should be? What do you think about that?
So I'd say the easiest and best way to do this is, this doesn't apply necessarily to pre-launch companies, but it's just a show and to showcase the case studies of success with apps on your platform, right? Showcase, you don't have to come out and say, I think I want this kind of, builder, this with these values, with these types of use cases. You basically can implicitly say that by showcasing and championing like the applications on your platform that reflect that. Now, before you have like actual apps on the platform, maybe you can do that even at like a open testnet stage or something like that. But yeah, no, I think it's worth showing the world, like telling them, okay, what is this product? What can it do? Highlighting like basically use cases, like companies that should exist, right? Like, I think Eigen had a great blog post in the lead up to launch of 12 AVSs that should exist. I think you can take that even further. And ideally, you're not saying like, we want an AMM, like, or like we want, Aave to come over. Like you're do so in a way that highlights like the unique properties of your platform, why they're differentiated, how this thing is, like what you're showing them is only possible on your platform. So in general, yeah, I think it starts with like values. Definitely be opinionated about values, but then at the use case level, like to the extent that you can not explicitly say like this is good, this is bad, but just implicitly like point people to what you want to see more of. That's what I would think.
Yeah, I guess what I would just like add is like it seems like we're talking more about like what you do when you're about to launch, right? Or like a pretty new ecosystem versus something that's like a little bit more has been around longer. Like I think maybe established, and maybe Solana is like actually an outlier here. Like the only other two really that anyone uses are Ethereum and I guess you use Bitcoin. I don't know how I would say whether people use Bitcoin, but like
They hodl.
they hodl. But I think like one thing I would like just lean into a little bit, and like we have examples of I think actually Shu Yao has actually done a pretty great job at this, which is there's a guy named Nick Martish, and I think I might just have executed his name at Paradigm. And he wrote something about like a crypto founder's guide to hiring BD. And in the book I read, plus what he wrote, like the book I read, it was like the last chapter. But in his thread, it was at the first point, which is founder-led sales. And how important founder-led sales are for new companies. Like you get a lot out of like understanding sort of who builders are, what their personalities are like, what you're like kind of actively looking for. And you have to go out and you have to like pitch yourself. You have to pitch the company, you have to pitch the network, and that you're trying to convince people, sell people that this is the place where like they can make an application that's going to make them successful in life, right? And this is like where they should bet on. Like you should bet on me and you should bet on our platform versus them and their platform. And when you figure out how to do that successfully and you can repeat it, then you can hire a BD person. I think Mert even had like a tweet, I think yesterday, about like hiring a CMO, right? Like do not hire a CMO when you just start. Like you are the founder, you are the market, you are the CMO, like you are you're the head of sales. Lorian Gable at Figment, like the validator, when I started there like in 2021, he was on all the calls, right? He was the one selling Figment to their very first customers, him and the CTO, which is like the co-founder. And I think like there's such a value in that. And like, I think you generally have to like, I'm not saying you have to like pick winners, but like, I do think you need to, if there is something that like your platform does exceptionally well and serves your platform, like and it's done better on your platform than anywhere else, then like you should really take the time to like find all the people who are building that thing and convince the one that you think has the highest potential to build there. And that comes from the founder. That's not going to be like, hey, just come on over and check it out. And like, here are the docs. And like, if you're interested, they want to be like valued. They want to feel like they're wanted. Right. And I think you can do a lot for yourself and for your network if you put yourself out there and you kind of say like, we're behind you. We're going to support you. What do you need? Do you need help? Do you need like engineering help? Do you want to talk to the engineers? Do you want to talk to our BD team? We're a big team. We're an L1. We probably raise like at least $10 million. You're a small team that's maybe raised $500,000. You don't have the same resources that we have. And we're going to lend our resources to you to really make you stand out. And we'll do things on like the marketing side. We'll do things on like the promotion side. We'll help with incentives to get people. If you build something incredible, we will be right behind you and we will be supporting you 100% of the way for like the first 6 months or 12 months or for whatever period of time. That seems like a pretty like high ROI time spent from a founder. And ideally that's like, you probably need to have multiple founders. You probably need to have like a technical founder and a non-technical founder. And the non-technical founder spends more time looking more like a CEO, and the technical founder probably spends a little bit more time looking like the CTO. And maybe those two jobs are like different for a very specific reason, because like you're going to be talking to very different like parts of the organization and like and strategies within the organization.
Yeah, you also just learn so much, right? It just creates this great feedback loop of information, talking to, even in the earliest stages of like an engagement with a prospect, like you will very quickly understand like what they value, which should then inform like, core protocol roadmap, like items, right? You'll get a sense of on the messaging side, what made them, like what got their attention, right? You can see that with like just body language, and that can help inform your broader external messaging. And then, I think exactly to Jim's point, like you're not just selling like a platform. There's, and like technology and a product. There's also, credibility that you can offer like that project, implicitly to the market, right? By kind of like showcasing them. There's like attention. If you have attention as an L1 right now, like you try to grab a ton of attention and hype for your infrastructure, and then you can kind of lend that right to the apps. We see that. I think that's why there were like 50 AVSs, right? Not all of them needed to be AVSs, but like that was a ton of free, mind share, right? That they could grab. And so, yeah, I think all of these things, like if you're a founder, just get as close as possible to the customer. Last thing, like Mike, you mentioned first party apps. I think I would definitely differentiate first party developer facing products, because most of these like platforms are just completely open source and free to use, right? But you can sell products like this hosted version of a rollup, right? That makes it like easier than, maybe an application wants their own execution environment, doesn't want to like do all the DevOps, right? So you're kind of increasing your target market, increasing the size of the funnel with these products, but also that's another way to stay close to the customer, which then should inform a lot of the core protocol development. So yeah, just get close to the customer and stay there. Find as many ways as possible to do so.
One other thing that this might be different for L1s versus L2s, and it's hard to really assign a reason as to why this is, but it feels different, is I think the most successful L1s have a type of guy associated with that L1 and a very specific personality. And like for Bitcoin, you can very clearly say, what is a Bitcoiner? It generally, the characteristics are you're a bit of a doomer. Maybe you eat a lot of steak, maybe you sun your butthole or whatever it is, but that's like generally the kind of the perception, right? Of like, if someone who identifies a hardcore Bitcoiner, you know exactly what that person looks like. Then version 2, like Ethereum also has a very specific kind of guy or gal, and it's very optimistic. It's a counter reaction to Bitcoin in a sense. It's very like almost quixotic, maybe a little bit, maybe too optimistic about what the world might look like. A kind of a dreamer is right, like roughly very research oriented, very technical. Like that's who I kind of picture. And then Solana is almost maybe a counter reaction to that. There is it's very pragmatic is the word that I would use, very engineering oriented, very
Wearing
no BS.
sunglasses.
Wearing those Solana sunglasses, exactly. And I think to connect it to the point that you guys are making about founders, the importance of the founder is it's large. Like, where does this come from? Where does the culture in a company come from? This is the one thing you can absolutely 100% never outsource. It is the founder. And all of the good attributes, the positive attributes about the average Ethereum, and some of the challenges come from basically Vitalik as a leader, right? He has shown he's like the beacon for, that he's still, I think, the main attraction, right, to what makes someone join Ethereum versus somewhere else. There's like a technological perspective around it, but there's also a type of vibe thing. And it's the same thing with Anatoly, I think, in Solana. He is the face, and he has demonstrated these types of developers, these types of values they should come and build. And so I don't know, you kind of see it with like maybe the Web2 equivalents of this are Tesla or Apple. You can kind of picture what an Apple guy or gal looks like. You can definitely picture what like a Tesla stand looks like. It's very definable. And I think you might need that for at least L1s. It's very difficult to point to basically, those are the most successful L1s, and there's a very specific type of person that's associated with it. And maybe that's true to a lesser extent for companies, but it seems more relevant for whatever reason for these developer platforms.
It seems like you might also know what the Berachain user kind of looks like, right?
Mm-hmm.
And I think an interesting. I sat down with James Hunsaker last week at the Monad office, and like we were just talking about like users and actually developers and like the developing, like who the developers are, like not just of like the applications, but also of the protocol itself, the network, the L1 itself, right? And I think like I walked away with like a better kind of like perspective on who Solana is like going after, which it feels a little bit more American, I would say, an American user, and like an American process of engineering versus like Ethereum, which goes after much more like kind of European style of like the core devs, right? The core devs are a little bit more European. They sit down, they pontificate and think a lot, and like maybe things will move this. But oh, I'm on vacation this summer, so like maybe it'll be Q3 or
Sounding a
4
little
that we get to this.
I don't know if you know this, Jim. It sounded a little critical here.
No, but like we sit, we talk, we debate, right? Like, and I think with Solana, it's like a little bit more American, where it's like we're gonna push this out. We're gonna go fast, and we're gonna see if it breaks, and if it breaks, we'll figure it out and fix it then. And I think like Monad is trying to sit somewhere in the middle, where like a lot of the research is coming out of Europe, and a lot of the development is coming out of like the engineering is coming out of America. So it's just like an interesting facet to think about, which is like where do the core devs sit, and like how are they thinking about things, and like a lot of it maybe is cultural, frankly, as well.
It's super interesting. I think that crypto has rewarded companies that actually don't necessarily find an optimal point on the trade-off curve, and instead of like there's a very definable brand. And we had Alex Watts, Thogard of Fastlane, come on, and he was extolling Monad because they actually do find sort of this point on the trade-off curve in between something like Ethereum and Solana, which for him is very attractive. I guess maybe the downside of that is if it's not as strong in any one way, shape, you might get lost in the messy middle. And I think there are a couple of L1s that might be at risk of not having quite a well-defined enough brand perspective that someone would feel like, yes, this tugs at my heartstrings. I am this. So that's just a tough thing, because there's not an infinite number of words, right? There's kind of like doomer, optimist, pragmatic. I mean, there's not infinite words that will tug at people's heartstrings.
Well,
so
yeah, and it goes back into like the folders thing, right? Like whatever, like, people think of you, you want it to be the biggest, mental folder possible, not like, kind of like this, but kind of like this, but, a little bit in between. But to be fair, like that's the nice part about being early to any industry. Like you can kind of claim those big buckets. And yeah, I think it's increasingly challenging to like create a new category. Like Celestia did it pretty well with modular, right? Don't think we've seen it since.
Yeah, I agree. All right, last question for you guys, just in closing. Actually, maybe a prediction question for you. How many significant L1s do you think there's going to be on a 10-year time horizon? Like if we're doing a Pareto of L1s by market cap in the year 2040, let's say 2040, what does that distribution look like? How many significant L1s are there?
Can I ask a question?
Yeah.
Is Ripple considered a significant L1 today?
That's a great question. I mean, yeah, I think you have to. I'm sorry. I think it ultimately probably comes down to market cap at the end of the day. Yeah. So if Ripple's in the top, if Ripple's in the top 3 in 2040, then I think you kind of have to consider them successful, right?
Yeah. And we're saying roll-ups are not L1s either. they're chains. I'm yeah, it's a very hard question, because I just see two very different products, like base layers with no execution versus everything where like you're fighting for execution, right? I think there'll be likely fewer of these, canonical base layers that, act as the source of truth, more competition
On the execution layer.
Yeah, more execution on the execution layer, but also higher network effects on the execution layer. So like more of a winner. It's still probably winner take most there. Yeah. So
I'm going to say 10 or fewer, but more than 5.
I think so too. I've always had 6. I have had this number 6. Is there are really 6 currencies in the world globally that have much trading volume? And wouldn't it be so poetic if we create the same number roughly of significant ones as you have currencies?
that would be funny.
All right, guys, this has been a ton of fun. We got to wrap it here, but appreciate you both coming on and yapping, and hopefully some folks. I think we got most of the points that we wanted to about go to market across and covered some pretty interesting ground. So hopefully folks found this valuable. Yeah, appreciate both you guys coming on and chatting.
Yeah, it was a blast.
Thanks for having me.
You
I
listening.
recognize now that I have to go out for drinks with you, and then the next day I get invited to a podcast. And so that's like anytime I'm feeling like I want to yap, I know what to do now.
You got to be tough.
I have,
Yeah.
I have told people I can be bribed with swag and drinks. So I live in New York. So yeah, hit me up, ply me with booze, and yeah, maybe we can do a bell curve at some point. But all right, fellas, appreciate you both.